Hello and welcome to the AAAFx week ahead. This is Chris Lewis taking a look at the week ahead in various financial markets. The first thing I'll do is I will look at the financial calendar for potential market moving events. On Monday, we kick off with core retail sales in the United States, which could be somewhat important due to the fact that traders, of course, are focusing on inflation. They desperately need to see inflation come down in order for the Federal Reserve to cut interest rates. If retail sales continue to be robust, we're nowhere near that, and it will have a major influence on the market. Empire State Manufacturing Index also comes out at the same time. It's not as important, but it gives you an idea of what manufacturing is doing in the New York, Connecticut, Pennsylvania, Maine, Vermont, kind of New England area. So that being said, Monday will be very U.S. centric. There is also a speech by FOMC member Williams. Probably not a big deal, but you never know. He could say something. Tuesday starts early in Asia with industrial production coming out of China, expected to be at 6% year over year. We'll see how that plays out. If it's a little better than anticipated, it could spur a bit of a risk-on rally. We'll just have to wait to see. Of course, the exact opposite could be true as well. Claimant count change numbers in the UK come out a little later. Claimant count change, basically unemployment numbers for the rest of us. Same thing, 17,200 is expected out of the UK. Probably not a major market mover, maybe localized to the FTSE 100 and the British pound. Later in the day, we get a mass amount of CPI information coming out of Ottawa. The Canadian dollar will be in focus, right along with the TSX 200. But beyond that, probably a pretty localized event to Canada itself. Later in the session, we get speeches from Bailey out of England, Macklem out of Canada, and Powell out of the United States. I don't think much changes, although people will be watching Powell's speech quite closely due to the fact there is a lot of confusion as to whether or not the Federal Reserve will be able to cut this year. We end the session with CPI coming out of New Zealand. That is a very localized number. It'll be a red letter event for the New Zealand dollar itself, but beyond that, probably doesn't have much of an influence. Wednesday has CPI coming out of the UK. Again, probably somewhat localized. And then we have a speech by Governor Bailey out of the Bank of England. Thursday, we get unemployment and employment figures coming out of Australia. Another localized number. We also get the weekly unemployment claims number coming out of the United States. Probably not a huge deal, but if it's a couple standard deviations out of the mean, anticipated to be 215,000, then it could have an effect on stock markets. Then finally, we end up with UK retail sales month over month. Again, localized. More likely than not, we are going to see little bits and pieces of volatility, but it could be a fairly calm week. That might be something that a lot of traders would look forward to. With that, let's take a look at the charts. Starting off with the NASDAQ 100, we have been all over the place during the week, and it should be noted that a lot of the selling pressure was on Friday. It was really ugly on Friday at one point, but we have recovered quite a bit. The euro has plunged during the week, showing signs of real negativity, dropping below the 1.07 level. By doing so, this signals not only weakness in the euro, but strength in the US dollar. The US dollar, of course, being strong against everything generally, if it's strong against the euro. It's also worth noting that the European Central Bank also said during its statement this week that interest rate cuts are very likely and signaled it could be as soon as June. So we'll have to see how that plays out. Could be very ugly for the euro and cause even more pressure on the US dollar. The S&P 500 has fallen significantly during the week, but probably worth noting that we are still above the crucial 5100 level and perhaps even more importantly, the 5000 level. We are entering earnings season in the United States, and that, of course, will have a major influence on the markets overall. I suspect we probably get quite a bit of consolidation at this point, maybe a little bit of a pullback, but that pullback, quite frankly, will more likely than not be welcomed by traders. You just can't go straight up in the air forever, so probably healthy. Over here in the gold market, you can see we really took off. I'm going to switch to the daily chart. You can see how big of a reversal Friday ended up being. This is a pretty ugly move. That being said, this is a market that's overdone. It just needs to pull back and find value. We are above 70 on the RSI, so from a conventional sense, we are overbought as well. So it's not necessarily about selling the market right now. It's more or less about trying to pick up the pieces here and perhaps finding cheap gold going forward. The Australian dollar initially rallied during the week, but struggled at the 0.6650 level, an area that's been resistance more than once, and then plunged to 0.6450. It was interesting because it set up, I'll go ahead and switch to the daily chart again. It set up pressuring this, and then the CPI numbers came out in America and just crushed the Australian dollar, or perhaps more importantly, strengthened the US dollar. With that being said, this is a market that had been in a 200-point range, so it does make sense that we're testing the bottom. If we break down through the 0.6450 level, we could very well go down to the 0.63 level given enough time. Bitcoin, more give and take here. And again, I think Bitcoin is a very bullish market, but at the same time, you can make the argument that it had gotten too far ahead of itself. So with that being the case, a little bit of consolidation here goes a long way, and it makes quite a bit of sense, with the $60,000 level underneath continuing to offer support and the $74,000 level above offering resistance. Short-term pullbacks are more likely than not going to continue to be bought into, and I think that's basically what you're looking for, is a short-term pullback to take advantage of cheap coins. The 92% rally in a very short amount of time is something that has to be worked off, and that's essentially what we are doing right now. Dollar yen has taken off during the course of the week. We have broken above the crucial 152 yen level. This is an area that I think was always going to be important, and now that we are through it, we have seen, and I'll switch to the daily chart here, we have seen a couple of attempts to break it back down, only to see more buyers come in. Seeing a couple candlesticks like this, and if we can get any follow-through, that's a very bullish sign. Would not be surprised at all to see the dollar travel to the 155 yen level. WTI, or U.S. oil, pretty unchanged for the week. We are at the top of an overall range. It is a bullish looking market. I do think eventually we break out. Same argument over here in Brent, right around 90. It's going to catch a lot of attention, but a lot of volatility right now. So this is the silver weekly chart. And we had broken above the crucial 2850 level and even tested 30 at one point, and or close to it, 29.83, and just got crushed on Friday. You can see this nasty candlestick. This is a classic reversal signal in an overbought condition. That doesn't necessarily mean that we break down significantly, but we certainly are flirting with it. So if you see gold fall, it's very likely silver will be falling even harder. As far as rallying is concerned, it's very possible, but we need to build up a little bit of stability first. The DAX in Germany has been crushed during the course of the week after trying to take off, but when you look at it through the prism of longer-term charts, we still have plenty of room to go before we change trends, so I'd be looking for a potential buying opportunity on a bounce. The pound against the Swiss franc continues to struggle with the 1.15 level above as a major resistance barrier. So the fact that we formed a shooting star is not a huge surprise. What I'll be looking for is if we do pull back from here, how does this market behave right around the 1.12 level? That's an area that I'd be interested in trying to find value. Euro pound weekly, just kind of bouncing back and forth. It continues to consolidate in what could be thought of as a potential accumulation phase. We'll just have to wait and see, but clearly nowhere to be at the moment. British pound, Japanese yen, all over the place during the week as well, but it remains bullish looking despite the fact that we may end up forming a slightly negative candle for the week. Given enough time, we probably go looking to the 200 yen level, but we've got to build up some momentum between now and that move. Ethereum markets initially took off to the upside, but then turned around to show signs of hesitation. By doing so, the market has shown itself to be a little bit hesitant, but really at this point in time, I think it's taken its cues from the Bitcoin market, and therefore, you'll have to watch Bitcoin. We've been consolidating between 4,000 and 3,000, and I think that continues to be the case. Any move closer to 3,000 that shows signs of a bounce will more likely than not be a buying opportunity. The US dollar has shot higher against the Canadian dollar during the week, and I think we're heading to 1.39. The 1.39 level is an area that's been important multiple times in the past, so we'll have to see how that plays out. But in the next week or two, it looks like the US dollar continues to keep the upper hand against the Canadian dollar, despite the fact that oil has been rallying. The British pound, much like the Aussie dollar and the euro, both had initially tried to rally and then broke down. I think this is yet another sign of US dollar strength. Nothing more, nothing less. Certainly nothing specific to the pound. The Swiss franc and the Japanese yen continue to bounce around above 167. Not a lot going on there other than simple grinding back and forth. It's in an uptrend. But neither of those are necessarily currencies you want to have a lot of money in. The CAC 40 in Paris initially tried to rally during the week, but then fell significantly. I think at this point, 7,900 euros probably gets tested to see if it offers support. We'll have to wait and see, but that's an area I'd be interested in. And then after that, maybe 7,600. Euro yen weekly. A lot of consolidation, a lot of choppiness, a lot of noise, underperforming the US dollar against the yen, but that shouldn't be a surprise considering the dollar's stronger. This is an interesting chart. This is the US dollar Mexican peso, and on the week we fell initially only to turn around and rally, but we have given back some of those gains here on Friday. This is a market that's in a massive downtrend, and it's an 11.75% interest rate coming out of Mexico that keeps the Mexican peso interesting. So while I would short signs of exhaustion, I wouldn't buy this pair because, quite frankly, you might as well buy the dollar against something that you have to pay less swap in. You're going to have to pay an astronomical amount of swap to get long dollar peso. Dollar NOK, dollar Norwegian krone, is pressuring 11. I think eventually we break through there and go looking to the 11.28 level. Short-term pullbacks, probably buying opportunities. Litecoin has fallen during the course of the week as the 105 level has offered too much resistance. And of course, it's probably worth noting that it's just following the rest of crypto in general. The Aussie dollar against the Swiss franc has formed a perfect shooting star right here where you'd be looking for signs of exhaustion and selling. If we break down below the 50-week EMA at basically 0.5871, then I think we drop towards the lows again near 0.5633. On the other hand, if we can turn around and take out the 0.6 level to the upside, that would be an extraordinarily strong sign and the Aussie would take off. And finally, here in the US dollar, South African rand, we've been all over the place during the week. You can see we dipped below the 50-week EMA only to turn around and raise higher. 19.15, I think, is your target. If we can break that, then you're talking about 19.5. Every week we take a look at the upcoming week here at AAAFx on our YouTube channel. I invite you to give a thumbs up if you enjoyed this, and of course subscribe so that you get these notices.
AAAFx, AAAFx.